Hey everyone, so we got some big news out of C3.ai that has huge implications for C3.ai stock investors. So in this video, I'm going to go over that big news and what it could mean for C3.ai stock investors. So let's get right into it. So the big news is that this shift from their previous sales model to the consumption-based pricing model is having a huge positive impact on C3.ai. So the company announced that they went from a 5 month sales cycle down to 3.7 months. So a more than 20% improvement in the time it takes to close a sale. So the CEO said that the consumption based pricing model that we have makes it much easier to adopt our technology. Previously, a year or two ago, to do business with C3.ai, you needed at least 5, 10, or 20 or $50 million just to get them to come to just to open the door, just to get your foot in the door with C3.ai. Now, the transaction, they're bringing the app live within 6 months and with just $500,000. Think of that huge improvement from having to come in at 5, 10, 20, or 50 million down to just $500,000. And of course, with that significantly lower initial entry point, that's going to make the product, the service more available, more affordable to more enterprises and expand C3.ai's market opportunity. Because if you're selling a product that starts at $5 million, you can understand that you're not going to have very many customers that can afford your product. But with just 500,000 entry, now you've opened the door to a lot more businesses that can potentially afford your product. So they've largely reconstituted their sales organization to adopt this new sales strategy, and the sales team that's much more effective as well because of this change. And so right now, the company's doing these pilot programs that generally last about 2 quarters. So they give you an introductory 2 quarter long trial that then turns into a consumption based model, right? So think of it this way: C3.ai goes in, sets up, and you get to use their services for about 2 quarters, after which, if you wish to continue, you switch on to the consumption based model, and your usage from that point on starts to get billed as you go. So the more you use the service, the more you get billed. If you don't use it, you don't get billed. So you can start to see those benefits starting for the third and fourth quarter of this fiscal year for C3.ai. So they expect their existing customers, the large enterprise agreements, to remain on those legacy type deals. So you'll see some impacts from the RPO and changes like that. So the business will go through this transition from its previous pricing model to the consumption pricing model. But the good news, the big news for C3.ai stock investors is that the change is having positive impacts. It's reducing the sales cycle, it's expanding the market opportunity, which is really good news for C3.ai stock investors. All right, but that's all I've got for this brief video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.